Welcome back to Investing Talk Podcast.
Today we're looking at Altimmune.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps the algorithm find more investors just like you.
Absolutely. And honestly, for today's deep dive, you might want to buckle up. We are looking at a company that is practically the definition of a battleground stock.
Okay.
We're talking about Altimmune, ticker ALT. If you follow the biotech sector, even casually, you've probably seen this name flash across your screen. I mean, it's been beaten down, written off by skeptics.
Left for dead, basically.
Exactly.
Yeah.
But right now, the data is signaling something that looks a lot like a massive, and I mean violent turnaround.
It really does feel like a high-stakes poker game when you look at the setup. I spent some time with the numbers you sent over, and the tension is just, it's immediate. You have a company that has effectively zero revenue today. I mean, we're talking pocket change.
Not even.
Right. But on the other side of the scale, they're sitting on a potential first-to-market drug in a sector, MS, that some analysts think is worth, what, $20 billion or more?
It's the ultimate high-risk, high-reward scenario. That is the classic biotech binary outcome, isn't it?
It is. All or nothing.
You either cure the disease and become a giant, or you fail the trial and just fade away.
Okay.
But the reason we're diving into this today, the reason it's flashing red on our radar right now, isn't just hope.
Okay.
It's a specific piece of hard news that dropped in January 2026. The FDA granted a breakthrough therapy designation for their lead asset, pemvidutide. And if you understand how the FDA operates, you know they don't hand those out like candy.
No, that changes the game. And we definitely need to unpack that designation because I think a lot of people treat it like a marketing buzzword, but it has actual, legal teeth.
It does.
But first, let's just set the stage on the price for everyone. As we record this, the stock is hovering around $5.38, so it's cheap. But when you look at the analyst targets, which we will get to, they are suggesting an upside of over 200%. So the question we have to answer for you today is, I guess, pretty simple. Is this a value trap that's going to zero, or is this the buy of the year?
That is the multi-million-dollar question. And I think the answer lies in understanding the so what here. It's not just about weight loss drugs. Everyone hears GLP-1 and they immediately think Ozempic or Wegovy.
Right.
But Altimmune isn't just trying to make you skinny. They're targeting a very specific condition called MSH, metabolic dysfunction-associated steatohepatitis.
Which is a mouthful.
It is. But just think of it as the liver shutting down because of fat accumulation. It leads to inflammation, scarring, fibrosis. It's an untapped gold mine because right now there are very few effective ways to treat it.
Okay, hold on. Before we get too excited about the $20 billion gold mine, I have to play the skeptic.
Please do.
We need to look at the cold, hard reality of where this company is right now. Because when I pull up the fundamentals, specifically that revenue line, it is, well, it's frighteningly empty.
Frightening is a strong word, but okay, I get it. What are you looking at?
The last 12 months, Altimmune reported revenue of $20,000.
Right.
Not $20 million. $20,000. That is less than a moderately successful graphic designer makes in a bad year. Meanwhile, their net losses are sitting at negative $83.92 million.
I hear you.
So you have 20 grand coming in and 84 million going out.
Look, if we were analyzing a software company, a retailer, I would tell you to close the browser and run for the hills. You cannot sustain that.
Yeah.
But we have to contextualize this.
Okay.
This is a pre-commercial biotech. In this industry, revenue isn't the metric of health. Cash burn and asset progression are.
Sure, but a loss of over $80 million is real money going out the door. You can't pay salaries with potential.
True, but that money isn't being set on fire. It's being converted into intellectual property. They aren't selling products, they're manufacturing data. That $83 million is the cost of running clinical trials, paying scientists, keeping the lights on.
Okay, fair point. R&D is the product right now.
Right. The question is, are they spending that money efficiently to get to the next milestone?
And on that note, I did see something interesting in the earnings estimates. The loss per share is currently negative $1.06. But the estimates for the full year of 2026 have actually improved. 60 days ago, analysts expected a loss of $1.33. Now it's $1.13.
Exactly. That is a significant revision. It signals that analysts are seeing better cost management or maybe more streamlined path through their trials. It's subtle, but it's a positive signal.
It means the runway is getting a little longer.
A little longer. But you can't value a company like this on its balance sheet alone. You have to value the moat.
The moat being the drug, pemvidutide.
Precisely. Let's do a quick deep dive on the science, because this is where it gets fascinating. You know, Ozempic and Wegovy, those are GLP-1 agonists,
Right, they tell your brain you're full.
basically. Pemvidutide is different. It's a novel dual receptor agonist. So it hits GLP-1, but it also hits the glucagon receptor
Okay, so it pushes two buttons instead of one. Why does pushing that glucagon button matter?
because of the liver. Think of GLP-1 as the brake on your appetite. Glucagon is like a gas pedal for your metabolism, specifically in the liver. It helps burn off liver fat.
I see.
In their phase 2e trials, which are the ones that really determine if a drug works, pemvidutide showed superior MASH resolution. So it actually helped fix the liver dysfunction. But here's the kicker. It did it without worsening fibrosis.
Fibrosis being the scarring of the liver.
Exactly. And that is the holy grail. A lot of drugs can reduce fat, but they might irritate the liver and cause more scarring. Pemvidutide seems to hit that sweet spot, and that's why the FDA gave them that breakthrough designation.
Okay, let's circle back to that. You said it wasn't just marketing. What does it actually do for them, operationally?
It's a massive accelerator.
Huh.
It creates a high barrier to entry because it puts them on an expedited review pathway. The FDA is effectively saying, this looks important, and we're going to give you more meetings, more guidance, and a faster review to get this to patients.
It saves time.
And in biotech, time is money. It protects them against giants like Madrigal or Novo Nordisk. It's a huge regulatory tailwind.
So they have the tech, they have the regulatory tailwind, but do they have the cash to get there? You mentioned that $80 million loss.
That's the financial health check. And their balance sheet is actually surprisingly lean. Very low debt, which is rare for a company burning this much.
Yeah.
And their cash position right now is strong enough to enable them to start their phase 3 trials.
Without immediately selling more stock, because that's the fear, right? Dilution.
Correct. Without immediate pressure for dilution. Now, that doesn't mean it's off the table forever. We should talk about that in the risks. But they aren't desperate.
They're not negotiating from a position of weakness.
No. And looking forward, analysts are projecting massive revenue growth. We were talking about, I think it was 477% projected growth over the next 5 years.
That is a staggering number, almost hard to wrap your head around.
It is, but it's based on that commercialization potential.
Mm-hmm.
If they get this to market in a $20 billion sector, going from $20,000 to hundreds of millions can happen very, very quickly. It's that hockey stick graph everyone dreams of.
Right. So the fundamental story is scary current financials, but a potentially massive future based on solid science and FDA support.
That's the thesis.
But fundamentals are only half the story. We need to see if the market actually agrees. The chart never lies, right? So let's pivot to the technicals. What are you seeing in the price action?
Well, the recent action has been bullish, to say the least. On the back of that FDA news, shares popped to nearly 4%. But even before that, there was a prior surge of over 16%.
That's a strong move. And structurally, looking at the chart, the stock has clearly broken out. It was languishing at lows around 424. And it has decisively broken above that. More importantly, for me, it's trading above its 50-day moving average, which is at 445.
Why is that 50-day line so important to you?
It's just a psychological line in the sand. When a stock is below the 50-day, the trend is down. It means the average holder over the last 2 months is losing money, so they're looking to sell.
It creates selling pressure?
Exactly. When it breaks above, it signals that the average price is now a floor. People are in the green. They're less likely to sell. It tells me the psychological state of the market has shifted from fear to renewed confidence.
That makes sense. It's the psychology of the crowd.
Yeah.
But is there weight behind that move? Or is it just a few retail traders clicking buttons?
That's the key question, momentum and flow. And looking at the volume analysis, the answer is yes. That 16% jump wasn't on thin air. It was on heavy volume.
That validates it.
It validates the move. It tells us institutions were likely stepping in. And the average 20-day volume is healthy, around 3.6 million shares a day. That's plenty of liquidity.
So plenty of people are trading it. What about the indicators? Is it getting too hot?
That is the one caution flag I see on the technicals. The RSI, the Relative Strength Index, is hovering near 70.78.
So over 70, that's usually the danger zone, right?
Conventionally, yes. It's considered overbought. It just implies that the buying has been very intense very quickly. It suggests there could be a short-term correction or some consolidation before it continues up.
So it might take a breather.
It might take a breather. It doesn't mean sell. It just means, maybe don't chase a green candle straight up. You might wait for a little dip.
That makes sense. But the fact that it is overbought also confirms the strength of the interest. It's a good problem to have.
Much better than being oversold and ignored.
Exactly.
So the charts are saying up and to the right, with maybe a chance of a pause. Let's shift gears and look at what the humans are saying. Let's pivot to sentiment and analyst data. Usually with these small biotechs, sentiment is all over the place.
It really is. I looked at the ticker sentiment score from the recent news cycles. It is overwhelmingly positive. Out of 11 recent news items, 10 were classified as bullish.
That is a very high hit rate.
It is. The weighted sentiment score for late January is sitting at around 0.55. In sentiment analysis, that is strongly bullish. The media coverage has been glowing.
And it's not just the news algorithms. The actual human analysts at the big banks are also on board. The consensus is a strong buy. But talk to me about the price target gap. This is the number that jumped out at me.
It's massive. We're trading at what, 538? The analysts have price targets ranging from $16.33 up to $19.
So even at the low end.
Even at the low end, you are talking about a potential 224% upside. At the high end, it's nearly 260%. That's the gap investors are chasing.
That's the greed factor right there. But I always like to see if the people running the kitchen are eating the food. Any insider confidence.
We have a very specific, very recent signal there. A director, Wayne Pisano. Between January 9th and 10th, he bought 5,000 shares.
Okay, devil's advocate here. 5,000 shares.
At $5. It's like $25,000.
Yeah.
Does that really move the needle?
I think it does, and here's why. First, insiders sell stock for a million reasons, buying a house, taxes, whatever. But they only buy for one reason. They think the price is going up.
Sure.
Second, look at the timing. He bought right in the middle of this volatility, right before the news really heated up. It signals strong internal confidence. He used cash to buy shares on the open market. That matters.
Fair point. It's the signal, not just the size. It tells you that behind closed doors, the mood is optimistic.
Exactly. And then you have the speculative catalyst. The rumor mill is churning. Given the FDA designation and how hot the MHH market is, there's a lot of speculation about M&A.
You think they could be a buyout target? It's a distinct possibility. Big Pharma is desperate for growth in this space. Altimmune has a de-risked asset now. It's a prime target for a partnership or an outright acquisition. Plus, you have other trial readouts coming in 2027, so there are multiple shots on goal.
Okay. You have painted a very rosy picture. FDA approvals, skyrocketing targets, insiders buying. But we are not doing our job if we don't look at the other side. Let's look at what could go wrong. Let's dive into the bear case.
Absolutely. Every biotech has a graveyard of failed promises. We have to be realistic.
What's the biggest risk for you? For me, it has to be the single asset concentration. We've talked all about pemvidutide. What else do they really have in the late stage pipeline?
Well, that's pretty much it.
Exactly. The company is heavily reliant on the success of this one drug. If the phase 3 MASH trial fails, and phase 3 trials fail frequently, the thesis doesn't just get hurt.
It collapses.
It collapses.
Yeah.
The stock would likely trade down to cash value, which might be $1 or $2.
That is the reality. It's
Yeah.
a binary bet. If pemvidutide fails, there is no plan B that justifies a $5 stock price.
And then there's the dilution risk we touched on. You said they have cash now. But phase 3 trials are notoriously expensive. They take years, thousands of patients.
They do. And since Altimmune is unprofitable, they can't fund it from operations. They have to fund it from the capital markets.
So eventually they'll have to go back to the market. Hey, we need another $100 million, and they get that by printing more stock.
That's a standard risk for biotechs, but it is very real. And if the stock price drops before they raise, the dilution is even more painful.
And finally, volatility. We saw the RSI is overbought. We saw the 16% pop. This stock moves fast. If you're an investor who loses sleep when a stock drops 10% in a day, this might not be for you.
That's true. But I would counter by saying at $5, a lot of that risk is already priced in. The downside, while real, is capped at 0. The upside is uncapped.
Capped at 0. A comforting thought. You can only lose everything. But I get what you mean. The asymmetry is there. You risk 1 unit to potentially make 5.
Right. So we've got the risks. Single asset failure, dilution, volatility. But we also have the rewards. So let's wrap this up. What's the verdict?
Based on everything we've reviewed today, we are assigning a bullish score of 8 out of 10.
An 8. That is a high confidence score.
Yeah.
So let's summarize the investment thesis for everyone.
Altimmune is a classic high-reward turnaround play. The key drivers are clear. You have the FDA breakthrough designation, that's the golden ticket. You have the phase 2b success, specifically in fibrosis resolution, which separates them from the pack. And you have a clear path to phase 3 starting in late 2026.
And the value proposition is simple. First-to-market potential in a market that could exceed $20 billion. If they capture even a small fraction of that, this company is undervalued at $5.
And we have validation. The market voted with that 16% pop. The insider voted with his wallet.
So what's the time horizon here? That's not a day trade, right?
Yeah. No, this is a multi-year hold. You are buying this for the phase 3 readouts in 2027 and beyond. However, because it's so volatile, there will be swing opportunities around trial updates. But the core thesis is long-term.
And I think the final note on the thesis is that improved EPS guidance. It offsets some of those standard biotech risks because it shows management is steering the ship responsibly.
Agreed. It shows they're watching the burn rate as closely as we are.
So there you have it. Altimmune, high risk, potentially massive reward, and a fascinating battleground in the fight against liver disease.
It's definitely one we'll be watching closely as they head into phase 3. That's all the time we have for today on this deep dive.
If you enjoyed this breakdown and want us to cover more opportunities like this, make sure you hit that subscribe button.
Like the video and drop a comment with what stock you want us to analyze next. We do read all of them.
Thanks for listening, and we'll see you in the next one.
Bye, everyone.